So the close of today marks a very pivotal point in the markets as it signals the close of the trading months of October, and in as much as majority of the markets has been calling for a 10k Bitcoin for majority of the months, and even as far back as last month, it will surprise you to note that Bitcoin is currently trading above 20,000 USD as we speak. Welcome again to Crypto Reality. It's your boy Pedro again, and this is my first broadcast for the month of October. Coincidentally happening on the last day of October. My last broadcast came on the 30th of September, which was the last day of September, exactly 31 days ago, and I'll be giving you the summary for the month of October, and I'm going to be apologizing first of all for being away for the entirety of the month. I've been so unstable, and I'll try as much as possible that this doesn't repeat itself again. And today's summary will be about why bears are currently getting exhausted in the markets, why we are not yet where the majority of the market expect us to be. I'll also be talking about why there will be massive volatility from the marketplace. Expect massive volatility from the marketplace this coming week, this current week rather, and I would also be talking about whether there is a recession and how Bitcoin is responding as well. So quickly, I'll be jumping straight to action. I'll be telling you why currently um, we are in what's currently happening in the market, why we currently are struggling to get to where we are, where the market expects us to be. We are in a downtrend, and the market is struggling to get to points where virtually everyone is expecting it to get to. And here is the singular reason why this has been the case. Here's the DXY chart, and we can see that for the very first time this year we're experiencing the formation of a lower high formation on the daily time frame. We had this massive major retracement from this impulse run, and we're expected, as normal as usual, we're expected to form a new higher high and then continue this uptrend. But unfortunately this has not been the case for the DXY. We formed a new lower high for the very first time in the market, and we also ended up forming a new lower low from the market, but not a convincing one. You can see that we are currently still within this trend line, this uptrend line. The base of this uptrend line is still holding our support as things stand. So as a result, we are experiencing some relief of some sort from the entirety, for the majority of the market. Market seems to gain strength from Bitcoin and Forex, and even the stocks as well. And this is how the market has responded. Here's the stock. Here are the stocks. The weekly time frame. You can see clearly that we've had back-to-back bullish engulfing candles from the weekly time frame perspective. Massive momentum candles from the weekly time frame perspective. So you can see that we're bouncing off a major support for stocks, and this is a clear case of a loss of momentum from the bears, in as much as we formed a new lower low here, which was supposed to signal the continuation of a downtrend. But you can see that the depth of this lower low is not a very pronounced one as compared to the previous ones. You can see also that the bears are losing momentum. This is a trend line that has been very much intact since November of last year, almost a year ago. and the market has retested this trend line from November to January to March, February, and then since February the market is gradually beginning to avoid the retest of this trend line, and this is very well a sign of weakness from them bears. And also you can see that we had for the very first time a formation of a higher high from the market back in August. Back in August we had the formation of a higher high, which means that in as much as we went for that to form a lower low, it was a clear indication that bears are gradually beginning to lose momentum, beginning to get exhausted as things stand. And you can see that we have momentum going for bulls the market. What is left now is volume to back it up, and gradually we're beginning to see that volume. Look at the monthly time frame. We're seeing for the first time an increase in volume since June from the market. We're seeing an increase in volume for the first time in June, and this is not just a bearish volume, but a bullish volume. From a monthly time frame perspective, we see an increase in volume for the first time, but not enough. You need to continuously see that backed up with momentum for the market to be able to rally back up to the upside. We need to the bulls need to first of all take care of this trend line that has been active since early this year / late last year, and take out this higher high for the market to actually see a bounce back, like a reversal of this trend. The market may seem to head back down from this point and maybe form a potential head and shoulders as things stand, or take out this low and continue the downtrend. But currently the market is bouncing off this support level, and you can see that there's currently momentum from the bulls. They need volume to back up this momentum, and you can see exhaustion from the bears with the little signs I've shown you before. You can see that the XAU, the gold market, is showing similar signs as well. We have a trend line that has been active, a downtrend line that has been active since March as well. Since March as well, and you can see a retest of this the base of this downtrend line in May, a retest of this in July, but since July we've been unable to retest this trend line again. This is a trend that has been occurring in the space of two months, starting from March to May to July. If this trend was to continue, we're supposed to see a retest of this bottom, this base, in September, but this is October. This is October ending, and we are not it is clear that we're not retesting this trend line as things stand. This is also a very clear indication that bears are getting exhausted, despite the fact that we've closed below a very major support level in the market level where the market has bounced from within the past couple of years. We have had multiple bounces from this level. Market is currently below this level, but the market seems to be exhausted below a very major support level. So aside the fact that the market is failing to retest the base of this downtrend line, you can see that the market is also finding support at the current bottom, which was formed late September. The market's retest bounced off that support, that's bottom, and retraced to the upside of this downtrend channel, and then we expected that we should be forming a new lower low with this new impulse run, but the market has failed to do that. The market is rather forming finding support at this same level, in the process forming a reversal pattern. double bottom pattern as things stand. So that's a clear case of weakness again from from the gold markets right below a major support, so you see this on the weekly time frame perspective, clearly see that after this bounce, after this retracement to the top of this um, downtrend channel, you expect that with this bearish engulfing week that followed, you would expect the market to rally down, form a new lower low, but unfortunately this has not been the case. The market is rather bouncing off this same support, this same bottom that it formed a couple of weeks ago back in September. So that's a clear case of loss of momentum from the gold bears. So we're currently consolidating below a very major support, a very critical support in the market, showing a clear case of loss of momentum from gold bears. On the flip side, you can see that the market is also trying to retrace this bearish engulfing candle, and you can see that this major support level has been flipped back to resistance. The market bounced off that level last week with last week's high. We had a bounce off that retrace, that support, which has been flipped to resistance now. So the market may still continue and form a new lower low, continue the downtrend, but irrespective, regardless, the inability to retest the bottom of this downtrend line, and the struggle to form a new lower low and form a potential double bottom are all signs of weakness from bears. I'll be switching also to the Euro USD, and I'll show you something very similar to gas happening on the Euro USD chart as well. And currently we are seeing something very similar. This is a trend line, downtrend line, very similar to that formed on the gold charts back as far back as March as well. We had March, we had the first retest in May, 2 months later. We had the next one in July as well, 2 months later again, and since July we have been unable to retest the bottom of this trend line again. And you can see that after a retracement to the upside of this channel, we were supposed to head down and form a new lower low, but unfortunately this has not been the case. You can see from this latest trend line, that mini uptrend line, that we are currently forming higher highs and higher lows and higher highs from the market as things stand. And also you can see clearly that this trend line has been compromised for the first time on daily and even weekly time frames, for the first time since March, when this trend line was established. We've been having retracement to the upside. This is a point where the market has always the upside of this trend line has always acted as resistance on multiple occasions since March up till now. For the very first time, it acted as resistance, and then we had a breakout. Finally had a breakout off above that, the upside of that channel, back on Tuesday last week Tuesday, October 25th, and we are currently experiencing resistance on the next major level, and we're seeing something that looks like a potential retracement to this trend line on daily and also weekly basis as things stand. So these are all is also a very good sign of weakness from Euro USD bears as well. So I'll be switching over to talking about why there would be, okay, I'll be talking about first of all why whether there is a recession, and if there is, which I think there is, I'll tell you how Bitcoin has responded like manner. But there are still arguments as to whether there is a recession in the market or not. But I am of the opinion that this is a recession, even if many analysts, many experts will argue. I will showing you why I feel this is a recession. This aggressive sell-off from the markets are not normal. You can currently see that the market is, we're currently seeing 20 lows from markets. This is the monthly time frame from the Euro USD, and with the current place where we are now in the market, we're currently seeing, we've touched 0.95360. The last time we were in this territory was in the year 2002. 95360, 95360, 9397 was back in June 2002. That was the last time we were in this territory. So you can see that even during the major recession, the so-called acclaimed renowned recession rather, back in 28, 29, we were not even up to this level we are currently. Things were bad, but not even as bad as things currently are in the market. So if this is no recession, I don't know what else this can be. The likes of GBP USD are even experiencing far worse than what the Euro USD is experiencing. What we're seeing from the GBP USD seems to be like an all-time low, because even we got to the point where we were back in 2002 with the GBP USD as far back as 2016, and we're far below that level as things stand. So we're looking at a multi-decade, if not multi all-time low for the GBP USD. I don't see where, not even as far back as the 1970s, that's the last time where we were at this stage for the GBP USD. So if this is no recession, I don't know what else is. You can see I've shown you previously how the likes of the gold have also been behaving, where gold has broken below a major trend support level that has held very well for the past couple of years. We're currently trading below that level for gold, and if that is not a recession, I don't know what else is. And fine, if we have established that this is a recession, I'll be showing you what that means for Bitcoin, in as much as everyone is calling for a 10k Bitcoin. Given the fact that we are in a recession, I need to remind you that Bitcoin has never experienced a recession before. Bitcoin was not present during the 2008-2009 recession. Bitcoin is experiencing a recession for the first time. So in as much as everyone is calling for a 10k, 5k Bitcoin and all that, you need to be reminded that Bitcoin was not present during the last recession, and it will be unfair to easily assert a certain figure to Bitcoin and expect that that must be the case. It is very important to note that Bitcoin may not even need to get to that level, those levels that are being called for Bitcoin, and that is because during the course of this current state of recession, if that has been established already, you would clearly see, would mean that Bitcoin has been reacting. The response from Bitcoin has been massive during the course of this um, so-called recession, as I may call it. Why other other markets like the forex are experiencing very pronounced lower lows on very big time, on the biggest of time frames. You can see that Bitcoin is just moving sideways, and ever since June, where we formed 17.6k low, which has been the bottom till date. We are still yet to revisit that level, that number on Bitcoin. Bitcoin has been very sideways. We talked about this in the last broadcast, given how we had the highest volume ever experienced, almost 10 million Bitcoin traded just last month, the entirety of last month, and we only formed what seemed to be like a doji. That is a clear sign of exhaustion from them bears. That is to tell you that even during the course of this recession, Bitcoin seems not to be ready to head to those targets, those levels, which virtually everyone is calling for, and that Bitcoin may still not need get to those stages, despite we being in a very very turbulent recession market, regardless of what is happening on other time frames, in other markets. Bitcoin seems to be very stable, irrespective of all the pressure and um, all the odds against it. Bitcoin seems to be holding on very fine. This is the monthly time frame. I see a very sideways market. This is the weekly time frame, a very sideways market as well. We're also in the process forming what seems to be like a potential double bottom from the sideways consolidatory state of the cryptocurrency Bitcoin, the cryptocurrency market. Here is the same thing, the same sentiment being shared on the total market cap as well. You can clearly see from the weekly time frame, very sideways market, very similar price action, and an almost identical price action on almost a one-to-one basis that is occurring on the Bitcoin market, happening on the total crypto market cap as well. So clearly, this is if Bitcoin is to be the future, just as we expect it to be, then it is very possible that even during the course of this downtrend and recession, we may not see those ridiculous digits that virtually everyone is calling for. The market may still, the chances of the market bouncing from here to the upside are still very 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 likely. So just to recap, okay, then finally I'll be talking about why we should be expecting massive volatility from the markets. As you already know, tomorrow being the 1st of November, 1st and the 2nd of November would be the FOMC, the Fed. Feds are going to be really coming up with their news tomorrow, and they're going to be releasing the new Fed fund rates, and as usual, that is going to trigger a serious reaction from the market. So we shall see what how the market reacts to the news tomorrow, 2 p.m. Eastern, and that will definitely trigger massive reaction to the market. So expect serious volatility come tomorrow, and most especially on Wednesday the 2nd. So that is it for me today. I hope you got value from this. I always remember that this is for educational purpose and not to be treated as financial advice. Financial asset trading is a risky affair, so always endeavor to carry out your own research before entering into it. Just to recap, I've made mention of the fact that markets are currently, the bears in the market are currently getting weak, and this is as a result of weakness via a formation of a new lower high from the DXY and a new lower low for the first time, like basically this year. We're having that from a daily time frame perspective, but that's not to be forgotten that on the weekly time frame perspective, we're basically just a retracing or major retracement, uh, and the or expensive major retracements on the weekly time frame perspective, and this trend line is still very much intact, and that is the reason why we're currently seeing the bounce from here, and weakness from the market. But the markets are seem to be strong on a general level, uh, below major supports that I made mention of, and Bitcoin seems to be reacting very fine, with respect to majority of the markets, in spite of the recession that we're experiencing. We're currently experiencing recession, and Bitcoin seems to be moving sideways, as opposed to the rest of the markets. Markets are beginning to grow gradually. Euro USD breaking out of a multi-month downtrend channel, and we're expecting serious volatility come this week as a result of the FOMC. So thank you very much. I wish you a happy Halloween, and I wish you a happy new month in arrears. Bye bye.